Hey everyone, welcome back to Corporate Dakota, the place where we unravel the secrets hidden within boring corporate filings. Today we are diving into a report from Greenpro Capital Corp. And let's just say this one has some interesting moves being made behind the scenes, like a chess game played with shares. So what is this filing all about? Well, it's a current report that companies file when something really important happens that investors need to know about right away. Think of it like a company's urgent news bulletin. This report is about Greenpro Capital Corp. They are a company based out of Nevada, though their principal executive offices are actually in Malaysia. Interesting international twist there for sure. Scroll SE Securities and Exchange Commission Center. This is a filing with the US Securities and Exchange Commission. Or the SEC, they are the government agency that oversees the stock market to make sure everything is fair and transparent. The big event that triggered this report happened on the 13th of February 2026. Now, the company's common stock is traded on the Nasdaq Capital Market under the ticker symbol GRNQ. The main story here is about a significant deal the company entered into. It's called a share exchange agreement. What does that mean in simple terms? It means Greenpro is exchanging some of its own stock for a stake in another company. The other company involved is called Focus Limited. It's a company based in the British Virgin Islands. Greenpro is buying a portion of Focus from its current owners, who are called the Focus shareholders. Now, for the juicy part, to get this stake in Forecast, Greenpro is handing over a substantial chunk of its own stock. They are issuing 8.5 million shares of their common stock to the Forecast shareholders. That is a lot of equity being traded hands. This deal means Greenpro will own 13.6% of Forecast's outstanding equity interests, once everything is finalized. This agreement has a deadline though. The deal needs to be fully completed by the 31st of March 2026. They have to sort out all the details and final paperwork by then. The actual share exchange agreement is filed along with this report as an exhibit. That's where all the fine print and legal clauses are. Think of it as the detailed instruction manual for this transaction. This section is basically where they list all the supporting documents for the report, like the share exchange agreement itself and a special interactive data file for their financial information. And the report is signed off by Lee Chong Kwong, who holds the important titles of Chief Executive Officer, President, and Director. This shows the top leadership is fully aware and approving of this deal. Now let's talk about what this all means. Greenpro Capital Corp is essentially expanding its reach by acquiring a significant minority stake in Forecast Limited. This could signal a few things. Maybe Greenpro sees Forecast as a strategic partner, a valuable acquisition target down the road, or a way to tap into new markets or technologies that Forecast offers. The fact that they are paying with their own stock suggests they believe their stock is valuable and that this partnership will boost its future value. On the flip side, giving up 8.5 million shares is not a small decision. It dilutes the ownership percentage of existing shareholders. Dilution means that each existing share now represents a smaller piece of the company. Investors will be watching closely to see if the value Greenpro gains from its stake in Forecast outweighs the cost of issuing all those new shares. The success of this move hinges entirely on how well Forecast performs and how effectively Greenpro integrates this new asset into its overall strategy. It's a calculated bet on future growth. Now, this filing doesn't give us detailed financial statements for Forecast or a deep dive into their financial health. It primarily focuses on the agreement itself. However, for Greenpro, it's a significant move that could reshape its business. We need to see how this 13.6% stake translates into tangible benefits either through shared profits, new business opportunities, or a stronger overall market position. Without that, it remains a high-stakes gamble. Looking back, Greenpro has been involved in various ventures, often focusing on growth and strategic investments. This deal with Forecast seems to align with that strategy, but the execution and the actual return on investment will be the ultimate test. They are betting that Forecast will be a valuable addition to their portfolio. So, what's my take on this? This deal shows Greenpro is actively seeking growth and expansion. They are willing to use their own stock as currency to acquire influence and potential future gains from Forecast. The key risks here are the potential for dilution if the Forecast investment doesn't pan out and the inherent uncertainties of any business partnership. The opportunity lies in Forecast's potential to drive significant future value for Greenpro. It's a bold move, and investors will be on the edge of their seats waiting to see if this strategic acquisition pays off. That is our breakdown of Greenpro Capital Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this deal with Forecast is a smart move or a risky gamble? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to check out our Discord community linked in the description below for more discussions. Thanks for watching, see you next time.